a YouTube, a IG, a Facebook, a social media, a everybody. How's it going? It's your boy Leo B the Lion, just coming at you. Just wanted to talk today about cryptocurrencies and what makes certain cryptocurrencies popular. This has to do with my finance question and answer. If you still have any financial questions, you can always ask me. Like I said, I have my background in finance and I study it a lot still because I have my investments. I have right now, just to be honest, I have investments in Anchor, which is ANKR coin, and I have investments in Decentraland, which is MANA coin. So let me just tell you today what makes a cryptocurrency valuable. In the old economics of things, there was it would be supply and demand, or the future value of the cash flows uh, discounted to the present value. So in those ways, you would be able to tell the price of a stock by if there was more shares coming into the market, the price would go down because the supply would increase. If there was higher demand for the stock, the price would increase while the supply would be staying the same. Or if the stock, say if Amazon partnered with somebody, an e-commerce company previously, to make their operations more faster, the financial analysts who do that, who are tasked to follow the company, to follow Amazon, would say, all right, let's figure out if there's an increase in future cash flows due to the synergy, due to the money that was saved, the more money that's going to be earned to Amazon. Let's discount those future earnings. So let's see what the next 5 years, if we can get those cash flows, that money coming in, what would be the value of the stock today based on those future cash flows. So that's kind of how stocks are kind of done. If you have any questions about that, you can always ask me, like, or comment on the video, and you can ask me, and I can explain it a little further. I'm just giving you a brief overview. So now let's take a look at why crypto is different from that. Because, yeah, people think that supply and demand matters in crypto, but as we've seen recently, that in the short term, crypto's prices are determined by two things. First, the most important thing that crypto's prices, any cryptocurrency, and when I say cryptocurrency, I'm talking about, let's just say the big three, Bitcoin, Ethereum, Litecoin, and there's probably over 200 other coins that are called altcoins. If it's not Bitcoin, it's called an altcoin for all the other coins, so alternate coins. So the first thing that drives a cryptocurrency price is its popularity. If it's known, if it's in the general awareness of the population. So the reason why Bitcoin, Ethereum, even Dogecoin, a reason why Dogecoin is going up so high is because, and has been rallying, is because of the popularity. People have said, oh, if Elon Musk is investing in it, if Mark Cuban is investing in it, if the Winklevoss twins are investing in Bitcoin, if Goldman Sachs is investing in Bitcoin, then we better invest in Bitcoin. And there's been even TikToks about certain coins that you should invest in to pump it. Like there was TikToks trying to pump Dogecoin. So the first thing that affects the prices of the altcoins or any cryptocurrency is the popularity of it. The second thing that determines the price of any cryptocurrency is, and chances are the more popular that the coin is, chances are the more it's talked about in mainstream media or on Reddit boards or anything like that, the chances are that coin, once it hits a critical mass of who it's reaching, and people start investing in it, you can expect the coin to rally. So the second thing that drives a cryptocurrency's price is its use case. And this is a very minimal thing because People try right now in the cryptocurrency space. It's like, I wouldn't say it's like the Wild West, but a lot of people are throwing different codes, different use cases. And when I say use case, so say a use case, let's just say a football. A use case for a football is that you go and take the football and you use it and you play football. Cryptocurrency is a use case to say, can I turn this currency and use it to buy and sell things? Can I use it to invest other coins onto this blockchain to earn interest? Can I use the coin's blockchain code to build decentralized apps? So apps that aren't built through Apple or Google Play Store. They're basically apps that are funded through that cryptocurrency. So those use cases that people use make the coin itself more popular, and then it kind of like feeds into the cycle. So, but what we've seen lately is that a coin doesn't necessarily have to have the best use case. Now, it's important for a coin to have a good use case so that if it ever does reach a certain amount of popularity, the fact that it's so useful will drive it even higher. But like Dogecoin, since it started as a joke, Mark Cuban was smart. Other people have been smart to jump on the wave, to ride the wave and say, okay, we'll accept Dogecoin. Not because it's so widely available, but they know that they're trying to drum up a use case. They're trying to make up a use case. They could have easily just said, okay, we're going to accept Ether. Okay, we're going to accept Litecoin. Okay, we're going to accept other coins. But Mark Cuban kind of wanted to ride the wave and be able to, along with Elon Musk, they're probably talking to each other. I wouldn't be surprised if Cuban and Elon have had conversations, especially since Elon wants to move his Tesla stuff to Texas, and Mark Cuban, is the Dallas Mavericks owner. So what I'm saying is the popularity of a coin and the use case are the two main drivers of cryptocurrency prices. But the popularity of the coin is probably about 90% of the price, and then the use case is right now about 10%. As the years go by and people get more familiar with cryptocurrencies and crypto things, I expect that the popularity won't matter as much as the use case. Because if you cannot use the coin, then it's nothing more than a store of value, and it's nothing more than basically like buying and holding. And most of the crypto market is pretty speculative. And when they say speculative, that means you're trying to generate a lot of returns, a high amount of returns in a short period of time, or you are trying to take advantage of a lot of unknowns within the market. So you're speculating with your money to try and figure out, okay, what can I buy? What can I get some return on? But if you say you put $1,000, the way that the crypto market is, you don't want that $1,000 just to be sitting there for a whole year and only make, 10%, $100. You want that junk to double. And what we're in right now is we're in exponential growth of these cryptocurrencies. So you can see that there's a chance for your money to double, triple if you pick the right coin and you get ahead of the wave. But you just have to watch out, because once the wave dies down and the coin isn't so popular anymore, the price might drop until the use case catches up to the popularity or overtakes the popularity, and then that would buoy and hold up that cryptocurrency. So have a great day, everybody. Just wanted to give you guys a little insight into the cryptocurrency world and what drives those prices, because sometimes I had to figure it out. Because as a finance guy, as a finance major, I'm not a finance guy like a finance bro. I'm just a finance guy. So as a finance guy, I'm like, everything has to have a reason as to why it goes up and down. You can look at the 10K of stocks. You can look at the news of stocks. You can look at their mergers and acquisitions. You can look at their capital assets. You can look at their cash flow. You can look at so many things and determine the price of a stock. But with cryptocurrencies, it's very difficult to determine, why is this crypto going up? Why is this crypto going down? So I'm just trying to tell you the two main reasons of why those go up and down is because of the popularity of the coin and the use case of the coin. Thanks a lot, guys, and I'll be coming at you soon with more financial related videos.